Oh, and we are recording. All right. So thanks for showing up for the Trade of the Week. As you know, the Trade of the Week has been moved to 5 p.m. Tuesday to correspond with all of our other webinars. So we're just keeping it real simple. Monday, Tuesday, Wednesday, Thursday webinars, and they're all at 5 p.m. Eastern. And so today we're going to just bypass the poll questions. Looks like we got a really good attendance, pretty typical attendance for our Trade of the Week. And got a few things to talk about, and so let's just get right into it. You see the Trade of the Week slide. Let me just click into the disclaimer slide, of course, which is always the same thing. We're not registered advisors. We are content publishers, traders, just happy-go-lucky guys here trying to share some cool technology with y'all, and should not be construed or misconstrued as any financial planning advice. If you need some financial advice, you got to go to the guys that paid the money and went to school for the licensing, so everything's on the up and up. So that's our disclaimer. Let's have a little fun, maybe try and learn a few things. Always make a point to stop on this slide. You're not alone with trade ideas. One of the reasons our subscriber growth has been so big as of late is we've really put a lot of focus into our onboarding and hand-holding and concierge. We recognize Trade Ideas as a very intense program. You can do a lot of things with it, scratch the surface or go really deep, and it's very subjective as well. It's been a 14-year technology in the making. So we recognize that some people need a little bit of help. So aside from the 4 webinars that I mentioned, we have the live trading room hosted by Barry Anderson, who is a wonderful multitasking trader, moderator, and Trade Ideas user. He's there to help people with some quick technical support questions. He's trading his real account in real time, and there's a lot of other good traders in there as well. It's a really nice community, and people go in there all the time and share strategies, share different scenarios. It's a great place to hang out during the day and kind of just absorb through osmosis some of the best ways to use Trade Ideas. And then beyond that, we have the one-on-one session that we offer everybody that buys a subscription of Trade Ideas Pro, either standard or premium, it doesn't matter. But once you've got the program, we give you a link to sign up for a one-on-one session with myself, Andy, or Jamie, and we can take that time to sit down and listen to you and really find out what it is you're looking to get out of the program and help custom tailor, you know, a good a roadmap for you going forward. Explain a few things, build a few alerts, answer some questions that you might have had, show you how to build a few things, and also share anything that you guys see on our screen that you like. We're very open to sharing strategies around here. If something works, we want to make sure everybody's seeing the benefits of our labor. And again, like I mentioned, subscriber growth, you know, the orange arrow basically indicates the introduction of the AI technology, and certainly has a lot to do with our growth because of the new product, but additionally, people have just been giving us, as usual, great great feedback on the onboarding process, on customer support. You know, we have the live chat on our website. People pop in there all the time. If we can't get something going and get you help, you know, we'll jump onto a desktop sharing. We'll come into your desktop real quick and see exactly what the issue is and get you going quickly, and people have certainly appreciated that. Quick update on Holly the AI. The blue line is the S&P. We're almost up to 1 full year of data. We started this back in January 1st. The blue line started the year pretty rough, little Brexit hiccup there in the middle of the summer, and some pullback before the elections, and then the bounce back after the elections. But what we're showing you here, the green line, is the aggregate sum of all indicators given out Trade Ideas by Holly. And so it kind of shows you over the course of time in the aggregate. It's like the casino has the odds, the house has the odds. It's showing you here that in the bigger picture, over the long run, the Holly AI has the statistical probabilities behind it and is moving, you know, considerably farther away from the performance of the S&P or SPY in this case. So just another quick visual checkup, an example on how the casino odds are in play when we're using this type of tool. And as I understand, I think once we get a year's worth of data, we're working on something for the website to be more interactive and have this available for people. But just quickly checking in here on the Holly update and reminding you guys that the casino odds are very much in play over the aggregate. Agenda is pretty simple today. Market recap. The Holly recap was very, very impressive day for the AI. We'll have a few things to talk about that. Trade of the week this week, which is really what this webinar is titled. CLF, we'll have some things to talk about CLF. We might even go back a week or two and just kind of check on some of the past trade of the weeks as well. And then just a little kind of a discussion. I guess we could file this under market psychology, trader psychology. Do you have a plan B when you get into your trades, or are you just blindly getting into them? We'll talk a little bit about all that. And then I've got some setups for you. We'll take a look at how last week's setups did, which I think did pretty well. And then that'll be it. Should be a pretty simple webinar for us today. So let's start with the market recap, which I already have up here. And if you were in the webinar yesterday with Jamie and myself, we pretty much don't have much more to say other than this one candle. What I had mentioned yesterday is still holds true today. This secondary line here was our all-time high in the spiders, and it's ad nauseum, but you know, prior resistance can become future support, and that's exactly what the SPY did to the T textbook. Really nice move, but it had to give some breathe back. Stock's got to breathe. Price action has to breathe. Rarely do you see, you know, really nice runs like that where the train leaves the station and doesn't give you a chance to get in. But we finally got a couple good hard days of pullback, and it's really not surprising technically. Again, while we look at technicals, this orange line represents perfectly the prior resistance level. And, you know, Dow Jones theory and my theory and everybody that I know, JC and Alpha Trends and Jamie and Andy, we all agree closing prices are the prices that matter. I mean, would you look at a monthly chart and get all, you know, hot and excited about a monthly chart in the middle of the month? No, you got to wait for those monthly charts to complete their candles, and same with weekly charts. So with a daily chart, we essentially did a little bit of testing here. We tested that level for sure 2 days in a row, but as it were, price closed as it should. The actual closing price is what we base our decisions on, closed right at or above that prior resistance line, which is now our current support line. Bounced off with a nice gap over the weekend yesterday, nice tail today showing buyers came in after some weakness and pushing, and what do you know, I mean, we are right back here to almost all-time highs again here in the SPY. Not going to be surprised to see that. Why? Well, leadership in the Dow. The Dow is still in that mode that I told you about, where it's just the train leaving the station. It's not even giving us a chance to pull back and test this breakout level of congestion as a possible pullback and a base camp to build for future support. Not even close there. IWM tried it. I mean, here was its breakout level, but when you do something like this, give a few days and then reverse, boom, and then push back off and make new highs, that's extremely bullish. What it's basically saying is we didn't even need to touch that line. We're so bullish right now in terms of the price action. So the price action in the Russell 2000 never even got back to the textbook level. And then, of course, the Qs remain just a complete mess. So we can zoom out, we can look at this, we can try and make sense of this, but it's nowhere near the all-time highs, still flirting with these levels in here. There's really not a whole lot to be garnered and derived from the footprints in the sand here in the Qs, other than it's just no longer leading us like it was back here. It's now just a mess, and it's in no man's land. What's leading us is the diamond, the Dow, industrials, you know, those types of things. And then also the Russell 2000. Small cap stocks are getting a real nice push out of, I only can assume, maybe a new administration. I'm not going to guess, but the footprints in the sand here tell the story. Just a neck snapping short squeeze, and then never really looked back. Numerous days before we had a pullback. And again, that pullback couldn't even make it back to the level that it ideally should. So that in itself just continues to tell you there's so much pent-up buy side still to be had in this IWM. We're in December, you know, the Santa Claus rally for those that buy into the seasonal stuff. guys, I just feel like we're just going to continue to try and move higher until further notice or a black swan, whatever comes first. Do you have any opinions on any observations there, Andy?
No, you hit the nail on the head. As a matter of fact, you took the words out of my mouth on top of that too, because I was going to say that I think you're going to say you're seeing the mother of all Santa
Mm-hmm.
Claus rallies still way before Christmas, and yeah, it's going to take yeah, it would take like a black swan, I think, to really derail it.
Well, what's different about this year is the election. The Santa Claus
Yeah.
rally with an election year now. Obviously, people
Hmm.
can speculate how they feel the election went. And what's quite funny, if you recall, hang on a second, apparently a F-16 just decided to fly over my house at 400 feet. If you guys recall, the night of the election, gold
Hmm.
spiked $100. The Dow fell 800 or 700 points. And then all of a
Oh yeah.
sudden, people came to their senses, put pen to paper. By the time the market opened the next day, it was this giant gap right here. So on the heels of what Andy said, yeah, we've got a bit of a Santa Claus rally, but what we've got behind is a full head of steam of a possible change in administration, which the footprints in the sand seem to be buying into for the moment. So let's all
Right.
forget what we feel about the election. The footprints in the sand are telling us that it's telegraphing, at least for the Dow, the industrials, and the small cap, decent things ahead. So that
Yep.
is that for our market recap. Again, Dow is leading the way. We'll touch on that again. That's one of the reasons we talked about the trade of the week. Kind of fits into the Dow mold, but we don't want to jump ahead of Holly. So now we're going to do our AI recap real quickly. This was today's starting lineup. And what I like to do usually is sort, just to kind of see which ones came in with a hot hand. But we can see by the end of the day, the one with the hot hand actually was the big winner here. It looks like 70% on this particular topping formation. Had 2 for 2 winners there. The bouncers, which I'm really kind of disappointed in, Andy. I mean, I've been watching this bouncers thing work. Look at this. I just random bouncer right there.
Yeah.
Double click. UNT. Here's the orange line. Here's the entry. Why didn't Holly take that one today? Holly's been taking some of the ones here and there that just haven't done much. So in my opinion, bouncers isn't really reflecting how well that I think it's been doing as an interesting alert. Again, well, look at that. Had some nice move and then all the way back. So bouncers had a goose egg today. But if we go back and sort here, really nice win percentages across the board. Also, risk off, $2.57, risk on $2.76. I don't recall ever seeing Holly in parity with risk on and risk off so close together. So really like the way everything shaped up to be today. We're going to see a lot of exits that weren't early exits. A lot of time-stopped exits, which means these trades were working for the full amount of time. There is one profit save in there, but for the most part, this was a really, really nice day, outperforming the market for sure, and bringing attention to some things that we may or may not have known about early on. What else is of note up here? Let's see. Again, just a real nice win percentage today. There was, some money being made long and short. No real directional bias. I thought I was going to see a directional bias this morning, but it didn't come out. We just continued to have a bit of both longs and shorts in the morning. So
Well, if
just
you
a
if you
very well
expand that,
balanced.
if you expand the trades out there, Steve, I think you're going to find, yeah, that the longs and you go to the either column, risk on or risk off. I mean, yes, the shorts did okay, but the longs by far,
You're
obviously
right.
we had a very strong market, and there was only 4 shorts compared to, what is that, about a dozen longs.
Yeah,
But
well, here's what happened, in the market today. If we look at the 15
mhm.
minutes, the last 2 hours was spent in a nice rally. So the one trade that Holly took short did make some money right here, but then you'll see the risk on staying in. It just probably rolled right back over with the
Mhm.
market. But yeah, without a doubt, longs were the way to go today. Um, so what should we focus on up here on some of these trades for today? Did you have anything of interest you wanted to call
Yeah, yeah, you can highlight that XNCR, just a beautiful trade on a bullish pullback, and you can see the entry there.
Ah,
Looks
okay,
like
so
you
let's look at
already
the
have it
entry
marked up.
first. Yeah, let's look at the entry first. Like those pullback entries rather than the breakout chasers, because sometimes you can get a better price than Holly. If you'll notice, here's the 2709 level. The price did come back and bleeded a little bit through. It actually went down another 8 cents, but bounced right back up. And as Andy and I say, we always love these contrarian entries where we're using a pullback to get in rather than trying to buy and chase a breakout. And then the second thing we say is zoom out, look left. Zooming out and looking left, we have basically this orange line kind of going through the tops here, but you could see that the price action had a shot at making a move through some really, really nice highs there. And of course, as we can see by the end of the day, in hindsight, it did. So certainly optimistic on a daily chart like this when you see that particular trade come out, and always like to see the pullbacks. I feel the pullback entries, the contrarian entries that we call, usually seem to have better staying power. I mean, this was our stop down here, so it never even really got close to that stop. And then so essentially what happened was, I'm going to guess, Holly, time stop. Don't know how many hours it was. We can always check. Let's take a look. So for the bullish pullback, if you want to find out what the strategy says for the bullish pullback, it's a 45-minute trade, a 45-minute stop. So basically, Holly was out after 45 minutes, but after 45 minutes, we're starting to break out here on the daily chart. Pretty good reason to maybe even sell half or maybe just try and let the other half go. But good-looking daily chart on that one for sure. And again, I like the pullback entries. I like the fade entries. Let's see, there's a couple that are short. One of them was called putting on the brakes. That's kind of a contrarian entry when it works. Bullish pullback is one. Quarterback is one that pulls 25% pullback as a quarterback. Bouncers actually is kind of a contrarian entry because it's basically just the way it's designed, breaking yesterday's lows, and then it's bouncing back through yesterday's lows. So it's kind of an early warning system on that one. But whenever you see the contrarian type entries where the stock has made a move in one direction and then Holly jumps in and says, boom, we're going the opposite direction here, whether it's a long or a short, I generally like those because that really, guys, is where the statistical anomalies start to show up. The things that we can't see with our eyes, that only the splatter graphs and the plot graphs of the data points that the AI uses, that's the kind of stuff they start to see that normally doesn't show up. Oh, here comes another jet. All right. So what else did you have on here?
Well, the Zion. I mean, this is not a pullback, but a beautiful breakout nonetheless on relative strength. Yeah, if you take a look at that daily, and remember how the overall market, the spiders in general, have been pulling back the last few days. But look how that was just kind of almost going sideways there.
Yeah, and, there's your daily chart, guys. So that orange line, there's nothing above it. When we say zoom out and look left, what do we see? Nothing, basically. But the sky's the limit unless we go back even farther, and it's just a 52-week high. But as far as the eye can see back here so far, that was a really nice breakout. So again, trying to train everybody to not just get so caught up on the intraday. What the intraday is doing is what's the bigger picture. And the bigger picture right here was literally a perfect breakout intraday and on the daily chart. So Zion was a really nice pickup. And once again, time stop. These are when you have to ask yourself, this trade's in the green. Look at these, 1, 2, 3, 4, 5. So you're in 6 green candles here. You're breaking out on the daily chart into no man's land, blue sky above. These are where you guys really got to ask yourself, do I want to get out here, or put your trader's hat on and realize, hey, there is no resistance above here on the daily chart, and I'm just going to keep this thing tight. I could maybe use a trailing stop if I felt like it, but again, the idea is in the generation of the entry signal. Once that's out, it's really up to you guys to manage this trade the way you want. The AI Holly has to get out at some point during the day, and sometimes it's 45 minutes, sometimes it might be 2 hours. But on a day when the market might be choppy, like we've had in the past, those might be the days where you say, you know what, maybe I'll just take it and go. The market's rolling over. The market's going to lows. Yes, the stock still looks great, but what's the bigger picture? And again, when we say use your trader hat, these are the kind of things you need to think about. What's the sector doing? What's the market in general doing? What's the daily chart look like? It's up to you. That's why we call it a gray box. A lot of people say, well, this looks like it's only for day trading. Well, day trading, every swing trade starts off as a day trade, because if it doesn't work, you should be managing your risk. And we'll talk about that. The idea is to get it to the next level. And so when we see a trade like this that could start off as a day trade, this is a classic example, guys, of say, yeah, maybe I'll just sell half, and the rest of it has just become a swing trade, the way it's breaking out on the daily. Okay, thanks, David. David's saying the jets aren't that loud on the back end, but I tell you, they sure feel like they're loud when they're flying over. I live near Miramar Air Force Base, which is where they filmed Top Gun, and every now and then they get a wild hair to start working on pattern work, where they put their gear down and their flaps down, and they just angle of attack 70% and floor it. I don't know why. Anyway. Thank you for that, David. It's not going to throw me off now that I know it's not as distracting. All right, there was this one. This was the first one of the day, I believe. Mm-hmm. Tilly's wake-up call. Daily chart was kind of interesting. You know, we had a real pullback red candle yesterday after two nice movements up. But the chart, basically, this was a wake-up call. So it's an early morning strategy. I don't fully know the whole details on those strategies, but it's an early morning momentum strategy, and this one seemed to work really well. I know a lot of people in the live trading room were actually working on this one, and Dan Merkin was in this one himself as well. But once again, we got to look at the bigger picture. Oops. Hang on a second, let me zoom correctly. The bigger picture is we had a giant gap up and breakout out of this sideways action. 2 days of really nice movement, one day of reversal, and this is almost kind of like the bounce me trade that I talked about. Basically,
that's what I was thinking.
Once it fights through yesterday's lows and starts moving back higher through yesterday's lows, what that really means, guys, is the shorts are not getting what they want. The most easiest, I should say, the laziest, easiest way to short a stock is to just say, I'm just going to wait until it breaks yesterday's lows. Well, I'll tell you what, that trade has not worked for a heck of a long time, and that's essentially what the bouncers trade is looking for. It's looking for stocks that moved below yesterday's lows, and yesterday's close, I should say, and did not follow through. It turned around and fought back through yesterday's close. That's basically the genesis behind the bouncers. So that's what it looked like on the bigger picture, and just did not give much of much of a fit all day long. Never even really came close to stopping out. Float on. Let's take a look at this one. This was interesting because we were buying down here at support. If you'll notice, the stock bounced back up. Our orange line is right about here, 23.14. If we superimpose that over here to the bigger picture of the daily chart, look at that. That's a major pivot level. Back here, some congestion here, basically the bottom there, bottom there, bottom there. So for the most part, it's not a perfect science, but when we identify pivot levels, this is what a pivot level would look like: from support, congestion to support, from resistance to congestion, back to support. So trying to pull up these daily charts here and give you guys some things to look at to try and help, discern where some of these holly calls might be in the bigger picture. But again, I think it was interesting to note that a lot of the trades today was stop hit. 1, 2, 3 stop hits. This was our first profit save. So this was one where basically Holly got into it for a good 45 minutes, and I bet you anything, I'll bet you $1, it was this first pullback right here that got Holly to say, I'm using my trailing stop. I'm going to not let this trade go negative. So that was a profit save. But the other ones we've been looking at, those were all timed stops. Next one here, GPI. Once again, what's going on the daily chart, guys? It's moving higher. It's been moving higher, and it's kind of extended. So that would be probably a bit of a caution flag. Andy and I are not going to sit here and say, hey, these two green bars look like the coast is clear. Go ahead and buy that high. That could have been a tough one. but you could see the stock did fight, put up a good fight as best it could around those levels. But you know, that's been a pretty good run for a long time. I'd rather see something break out of a level or have it make sense at a level. And that one again was a timed stop. Let's just take a look at one more. Looks like this one was float on. Once again, we got a little bit of alpha, and then I'm guessing, yep, profit save. So here was the alpha drawn from Holly, 3 nice green 15-minute candles, and then as soon as the profit save kicked in, a bit of a pullback, locked in that profit. We're going to talk a little bit later about, you know, having a plan B and how to stay in this game, and what one of the worst things you can do as a new trader is suffer big losses. And what Holly does day in and day out is demonstrate no big losses. Okay, 25 cents was the biggest loss that was taken today. So even on the bad days, Holly is demonstrating perfect rule management. Holly's not going in and saying, gosh, you know what, I really feel good about this trade. Come on, guys, let me buy another double. Let me double up down here out of the money. No, Holly doesn't do that. Holly is going to demonstrate perfect risk management every single time. So you will never see a giant loser at the bottom of the ledger here. Yep. So again, pretty solid day for the AI. This is early adopters for you guys that are using this stuff and watching these things coming out. You're going to be hearing a lot more about this, I can guarantee you, in the next year coming up in 2017. We've got some good plans. We're getting on the radar. The word's getting out. Anything else we should add?
Yeah, let me answer Pedro's question there. Pedro asked, he wants us to explain the profit of 286. Is that a percentage? No, Pedro, what that is basically for every share that's, yeah.
Thank you.
If you want to pull that, yeah, if you want to pull that down. Yeah, I'm sorry, Steve.
We're talking
for every share
about,
that you,
okay.
Yeah, for every share that was placed on each trade, you would get $2.86. I guess you probably own risk on.
76 was the other one.
I'm not sure where that's 86. Okay, it's 276.
276.
So in other words, if you play 100 shares on every one of these stocks, you at the end of the day you would be up $276. $200.76. Is that right? No, that'd be $276.
Yes.
Is that right, Steve? Yeah.
It should be, because this is just based on one share.
He's got it.
So if you had one
based
share,
on one share.
Got it. All right, thanks. Exactly. Good. I'm just glad we weren't missing a single trade, so I'm glad you pointed that out. All right, only 16 or so trades today. Pretty nice. Again, I want to remind you guys, keep an eye out for directional bias. Tomorrow, for instance, if you see Holly has 0 trades and 10 o'clock rolls around and we get some economic data and all of a sudden Holly goes long 5 or 6 things, well, get ready for a possible move in the market to the long side. And the same thing can happen on the short side. I just want to remind people the directional bias indicator as well is if you see a handful of trades come out quickly all in one direction, keep an eye on the market, because more often than not the AI is seeing something brewing under the scenes and kind of as an early warning system to direction. So
and on top of that, always keep an eye out for sector bias too, because a lot of times,
yeah, we had some sector biases last week. Holly actually jumped into a couple of shippers. There was a day where there were some oil plays. Holly was buying some of the oil plays. So it's always a good idea, again, for you guys to remind yourself and brush up and know where your sectors are. What sector is AMAT in? AMD? Are those semiconductors or are they whatnot? It's a good thing to get to know. Okay, so that would be it for the ANI. Another good day for ANI, just continuing to outperform the S&P, giving us casino-type odds in the aggregate. So let's go to Trade of the Week. Now, Trade of the Week this week, as I said earlier, we wanted to talk a little bit about sectors. We knew going into the weekend where our leadership was, the Dow. And as always, we're looking for, some trend change type scenario. So let me really give you the bigger picture here of CLF. And to do that, I got to kind of really widen my whole screen. Okay, so this is where CLF's been in the past. It was a $40 stock, over a year ago. But this is the typical trend change lubricant stuff that we're normally looking for. Especially, it's the first go-to. It's the first go-to pattern or strategy that we like to do for trades of the week. because we like these trades of the week to not be a day trade, not be a quick swing scalp, get in and get out in 3 days. We'd like to look back and say, hey, that was a really good trade over the course of a long time. AKS was a trade of the week at one time. And as you can see, it took a little bit of courage occasionally, but once it got going, it took off. And these are the kind of things we're trying to look for. CWEI was a trade way back when last year. Again, back down here looking for that trend change, trying to bull bottom, and then try to find the pivot point of where, the shorts are going to say, I can't take it anymore. So a lot of times our trades of the weeks are going to look like these trend changes, and they're going to have a short contingency. Well, CLF just so does happen to have a short float contingency of 27% on 100 million shares. So there is a bit of short squeeze going on, I believe. CLF, if you don't know, and again, you got to know your sectors, it's the iron ore sector. They are metals and mining minerals, and so if X Steel's been doing so great, and AKS been doing so great, and STLD's been doing so great, well, CLF chart was looking pretty interesting, and it's kind of a lagger because it's the base mineral iron ore that these steel companies are working with. So coming into today, obviously we did already have a nice run. We had a 1, 2, 3, and then a gap down pullback, and then basically this looked to me to be building a new base camp, a new higher low. So coming into the weekend, we had these 2 green candles right here, and that was it. Now sometimes the trade of the week is contingent upon a trigger trying to get back above this price, or sometimes it might be contingent upon a pullback where it backs and fills into a price. And then sometimes the trade is just live right at the open. And we felt this week that the way the candle patterns were shaping up, that this was going to be one we didn't want to miss out on. We didn't want to try and get too tricky. So it was basically just get live at the open. And we had a nice first day. Now, the first day moved beyond where we wanted to see it move. And so let's just go ahead and put this in there. That's the level we cleared through. We closed above it yesterday. We had a little bit of a pullback today, but look at that. The buyers stepped back in, and again, the closing prices matter. Closing price above the prior resistance. Now, we know that there's 27% short. They're looking at this thing going, okay, I've been short since down here. I'm not really in the money. We just technically took out a level. These are the kind of things we have to keep in the back of our mind for possible continued upside movement. But again, I backed this thing way out earlier to try and show you from where it's come as to where it could be going in the future. I mean, there's no reason to think that CLF can't get back up into these levels right here. Okay, certainly if we want to look left and zoom out, this is going to be a level of interest as well. So from here going forward, I see no reason why this prior support, if all goes well, I don't know if it takes weeks or months to get there, but these are the types of basing channels, stocks that we're looking for. Stocks go through cycles. They go through euphoria, they go through disbelief, they go through pain, they go through capitulation, and then they go through, I'm starting to believe again, I'm starting to accumulate again, I'm starting to get excited again. I mean, there's 5 stages, and I didn't hit them perfectly, but that's basically what happens in cyclical stocks. They make 52-week highs, and they're going, take a crap for another year. Then they might turn around and come back in favor again. But these are the basics that we like to truly try and hone in on for trade of the week. Now, where would we want to manage this trade? I know that the original trade manage was a bit lower, but we've got 2 days under our belt now. So if we wanted to, I mean, we really theoretically could, move a stop up to this level right here. Gosh darn it. Move a stop up to this level. Hang on a second. How did I do that? Maybe the low of that candle right there. Because if it breaks back down below our breakout, well, this is going to be our range going forward. And if this is going to be our range, we might as well just use the low end of this level right here. I believe, again, like I said before, the stop was down here, but now that the stock's moving in our direction, there is nothing wrong with, managing our risk and moving that stop loss up a little bit. I'm going to go back a week because some people might be curious. Last week, INVN. So this was one of the ones that we said the way the markets were working and the way things were working, we didn't want to just say get long. This little wick had already kind of shown itself and the real level of interest is basically above that orange line up there. And so I believe the trigger point was somewhere above this line. And if we had just said, get long here in the middle of nowhere in no man's land, anything can happen. And it did. It was a pretty vicious, nasty pullback. So for this particular trade, technically, it's still open. It just has to get back above these levels up here, 841, 842 level. And, based on the last 3 days, it might be trying. But let's take a look once again at the bigger picture. Here again is the same type of thing, a stock that's been in a nasty downtrend, putting in a base. This was our two lows down here. You could even call that kind of a double low. And then we're up here making higher lows. Now we're in this range. I can kind of define this range easily for you. So essentially, and of course this stock does have a short float component underneath it, INVN, only 12%, so not much to write home. I prefer 15 or above. But here is a very easy trading range for people to identify. And so if you have price alerts, the long sideways action that's been going for ever since back here, you could even kind of call this an inverted head and shoulders, shoulder, inverted head, and inverted shoulder. I fully expect at some point, I don't know if it's going to be days or weeks, but the price to move back above this level. So the INVN trade is still considered a long trade of the week if it triggers, and if you guys are aware of it. If you have the price alerts, it's so easy to just go ahead and create that price alert. So that was last week's INVN. The week before was POT. And let's just take a quick look at what happened with POT and what the market tends to do to us. Here was the pattern we were looking for, and here's where we called the action. And this was another one. We said get long on the open. And POT got long on the open. We had a bit of a gap up and a nice move in the right direction. And then what this market just loves to want to do is to take a quick breather and see what it can do to try and shake the people out that just bought up here. Not always, but more often than not, this is the kind of market we have. It feels like you get on a bucking bronco and it's doing everything it can to try and get you to your stop loss. But one of the hardest things to do, whether you're day trading or swing trading, is sit through that first pullback. And I can tell you, if you can do it, once you've sat through that first pullback and you see the base being built, and then you get that secondary move, it's so much easier to start to sit in these things a little bit longer. Again, the guys in AKS, if they have freaked out after the first pullback in AKS, they would have missed a lot of this longer stuff. And of course, there's never anything wrong with selling a little bit along the way as you go. But again, one of the hardest things to do is to suffer through that first pullback, POT. From 3 weeks ago. And, it did it. It pulled back. It went negative a little bit, but lo and behold, we're right back in the money very nicely now on this POT trade. And again, I'm not trying to bring in day trading scalps. We're looking for longer term type stuff. So the POT trade is still intact as far as I am concerned. Now, let's just take a look at risk management. Probably the best thing to do is just go ahead and use this markup here, because if this in fact what it was a breather and the building of a new higher low, a new base camp, well, we've pushed way off through that base camp. We really have no business coming back down through this level. So I would say 1747 would be probably the revised stop moved up for the POT trade. All right, real quickly, just want to talk a little bit about some psychology. For those of you that may have seen, we had an event on Sunday in San Diego, Carlsbad, and we invited a couple of female traders in. Airplane Jane from the live room came in. It was nice to meet her and her unborn daughter. She did a great job, and I got to admit, I didn't know as much about Jane as I did until I listened to her. The girl's been investing since her teens. She had a Series 7 license at one point, and it was just in the last year or over a year ago, she got into the Timothy Sykes day trading and has really taken off on day trading. And so we were discussing yesterday or Sunday the fact she's a pilot, and I used to be a pilot as well. And being a pilot, if there's any pilots out there, good on you. You'll understand exactly what I'm saying. Scanning the charts, scanning the markets is almost like scanning an instrument display on an instrument approach, or when you're flying your plane. You're constantly focused on a few different indicators, and it creates kind of a really nice habit, as we were both discussing. And then our conversation took another airplane related turn, and that was one of the things that I think helped us be good traders, both Jane and myself, was that when you're trading, you have to have a plan B. You don't just jump in the plane and take off and, hey, where are we going? No, it's not like that. When you're trying to get your check right out and get a license for an airplane license, you're flying along, and all of a sudden the instructor reaches over and pulls the throttle back, and the engine stops. And he looks at you and says, "What are you going to do?" And it's at that point you realize you better have a plan B. And so we kind of laughed about the similarities of trading and having a plan B, and also flying and having a plan B. So guys, if you're jumping into trades and you're not identifying your downside risk, and let me qualify that. When I say identify your downside risk, I say identify your downside risk at a technical area, like we just did right here. This is the technical reason to get out. Let's say, maybe somebody bought the trade today, and from whatever reason tomorrow the trade goes south. All of a sudden, the trade's right here, and they're like, "Oh my God, I've lost $500. I can't lose more than $500. I got to get out." Well, the market doesn't care that this level right here means $500 is your personal point of pain. And what I'm saying is you've got to correlate your personal point of pain. If your rule is I'm not going to lose more than $200 on a single trade, well then if you're entering right here, this level right here better well equal a negative $200, because again, getting out is where the market doesn't care that you're down a certain amount. It's all about the technicals, and you've got to bring the technicals into your decision making and have a plan B. Plan B does not mean go through this line and then second guess yourself and change it up and then buy another lot and then doubling up on a down position. That is not a good plan B. Good plan Bs are always looking and saying, well, we hope the trade goes higher. That's why we got in. That's what we want. But what if it doesn't? What is my maximum point of pain? And again, that maximum point of pain should correlate with the way you share your sizes. And that should correlate to the actual technical level of the most pain. A little bit of what I think I might be seeing here, and this is Steve's opinion only. This is GDX. GDX has had a pretty good fall from grace. And GDX down here, you can't see it, but going back this level, if you guys follow me on Twitter, I tweeted it over the weekend on a weekly chart. This is one mother of a pivot line. I'm telling you, it goes back years. It's right above $20. And we've got one bounce, two bounce, three bounces off of this level. That's a very solid support level for the gold miners, GDX. So let's assume, from what I was just saying, that today the price is at 21. Let's say it pulls back. Let's just use even numbers. Okay, let's say it pulls back to 20 and you want to get in. And your biggest point of pain is $200. All right? Very simple math here. Our exit is just below 20. So you're giving yourself one full dollar of room to work. Now, you've got to size your shares accordingly. If your biggest loss that you want to take in your risk parameter world is $200 and you don't want to take any more than $200, well, guess what? You need to be taking a share size of 200 shares right here at the 21 level. So, I mean, we could spend time on this, but the point is always have a plan B. Where's your out? Know where your out is and size your shares accordingly to get out at that level. And whatever you do, don't change your mind. The market has a funny way of making people change their mind. Have a plan. Stick to the plan. The plan didn't work, you can always get back in, take it one trade at a time. It's just like a surfer. Get back on the board, paddle back out and try it again. But by all means, don't just jump into a trade here and say, oh my God, I'm down 500. I got to get out. And before you know it, you're getting out in the middle of no man's land, which makes no sense whatsoever. And it's just usually never a good thing. Well, I've been talking a lot, Andy. Do you have anything you want to add to our have a plan B in your trades repertoire?
I'm sorry, I was answering a few questions, but so I'm not sure exactly where you were, but I will agree with everything you were saying. I mean, you have to have, and as a matter of fact, I was just telling somebody, you have to have a plan to exit if you were wrong. You know what he's talking about. He was referring to, you know, what's the best way to, you know, use limit orders to buy gaps, and I said, And I know what he's talking to because I see stocks a lot of times, what's called gap and go, and sometimes the gist of the move can take place in the first 15 minutes of trading, and it's very frustrating if you're trying to be patient and wait and you miss that move. So I used to place them sometimes before the bell, or actually buy the market in pre-market, but I always had a plan. I always have a plan to exit if I'm wrong.
And sometimes that plan is ahead of time to buy a third or a quarter of what do we call it?
Mm-hmm.
Get it on the radar, feeler share. I got some feelers out. I got, a starter position, okay? Now, starter positions are different than full position. Full position goes below your point of pain, you double up, you're being a fool. Starter positions are basically just to get yourself focused, get attention, start watching it, focus in on it, add to your position, add to your position. But once you have that full load, you best know where your out is, and you best not change your mind and flip-flop, because that's what's going to start to lead to the large losses. And I'm telling you folks, large losses are what get people out of this game. I had to go through it. Andy remembers way back in the day, I'd come in, I had about 3 trades that I thought I knew were going up for whatever reason, and every single day they'd go lower. I'd make a little bit of money day trading, but my opportunity cost and my mental opportunity cost was just looking at these albatrosses around my neck, wondering when the hell were they going to turn? Why didn't I get out of them when I said I was going to? Because now it's taking up all my emotional capital and all my intellectual capital. You don't need that. You can clear the decks and you can start fresh, but know you're out, know your rules, know what happens if the instructor reaches over and pulls the throttle back and your plane starts to sink. You better have a plan.
Mm-hmm.
All right, let's move on. Last week, for those that attended, I did give out some price alerts. And what I did is before the webinar, I basically cut out some of the other ones I had, but I left in every single one that we sent together last week on the 29th of November together. Looks as if all of these triggered. A-Core did not trigger, but boy, 1, 2, 3, 4, 5, 8, 6 for 6, $5.34. I hope somebody, got some decent ideas. What was working? Once again, the trend change lubricant, 33% short. NXT had a big short push through its levels. Actually, that was, I believe it took a while. It took a couple of days. Today it had a really nice day. Another one, 7% short, but still working high, 11% short, 21% short. So we're going to continue to stick with the themes today, and it doesn't really probably, I should say, it probably makes sense when you look at the market when we started off today talking about how we got a runaway market. These shorts are in trouble. There's probably some stubborn ones that are still out there that might still need to cover, and that could translate into short covering, short squeeze, rocket fuel going forward on some of these. So I do have a few. I am going to leave A-Core in there. So let's do this. I'm going to leave A-Core in there. Let's just go ahead and start with that one and see where I want to mark this one up. Basically, it's still the same one. It's still the same price. You can see it's just pennies away from triggering here on the daily chart. Really nice pullback, sideways. It doesn't want to flirt with this level, but if it does flirt with this level, we got 13% short of that float that could trigger. So let's do this. How do I best, because I want to have these all coded for the same day so there's no confusion. So I'm going to delete that one, and then we're going to rework it. Delete price. We're going to delete all the price alerts. I just wanted you guys to see that what was given out last week was some pretty good stuff. All right, we're going to delete these 4 alerts, 7 alerts. All right, we're going to start with A-Core. We're going to pop it right back above. Where did I have A-Core? Let's see.
Right there.
Yeah, basically pretty much right here. We're going to call 94. And A-Core short float is 13%. Trend change. Don't trigger on me. Okay, a working alert. Great. So there's our first new alert for this week. Got a couple others. Got 4 of them from the good old handy-dandy trend change lubricant window, which where a lot of these derive from, and this is what's been working lately. So why stop using what's been working? CVI. Let's just go ahead and double-click into CVI. Let's take a look at the metrics. 36% short. That's huge. 15 million in the float. That is nothing. and it looks like it got a little bit away from me today. I was going to put the alert right above that wick, and in the last couple moments of the market, we closed on highs, but that it's not going to stop me from putting an alert above today's highs. 1853. Create alert because, again, I really like the metrics on this one of the short float with only 15 million shares. That's a recipe for afterburners if the shorts freak out. So I remind myself it's on the trend change lubricant. I remind myself it's 36% short the float, and I remind myself it's only 15 million share float. That's a recipe for a short squeeze. So we'll go ahead and set that one. I wish it didn't trigger. I wish it didn't go as much up at the close, but nonetheless, that's what we got to work with. A-Core, we did that one. CPSI, well, what do we got here? This is kind of interesting. We've got 35% short the float on 13 million shares. Not much to go there on the size of the float, so it really could get out of hand quickly if it does. I'm just going to use these two levels right here, the high of these two wicks, and if we can get above this little level, it could be a head start. Ideally, it's going to want to get above these levels, but I feel like it's going to get there, so I want to get a bit of an early look, and so we're going to call it 2571. Trend change lubricant. We've got 35% short the float and only 13 million shares in the float. Go ahead and set that one. WDR, do I have that one on here? Yep, there it is, WDR. Only 11% short, a bigger float of 79. Let's zoom out and take a look at what we got here. A pretty definitive, and again, this one, I showed Andy before the close, this one snuck up and got me. It is right there. I mean, basically, it needs to get right above here. Looks like it may have even taken it out by a couple of pennies, so we're going to take the high of the closing bar here. We'll go 2008, and I would not be surprised to see some follow-through on this one, just because I really like that pattern. This is TCL, trend change lubricant, but only 11% short the float. But what I really like is this very definitive price level to move through. Okay, let's see. We did those. Okay, I got one. My washout bounce has been kind of quiet lately. I think it's just been the way the market has been working. And this one, you know, could probably go either way. I would like to have seen it maybe close a little bit closer to highs, but what I will do is I'll just take basically the highs of today. We're going to mark this up as a washout bounce and just leave that be. On the daily chart, usually zooming out after a roll down on a fall back and a big down and back up with a nice long tasty wick can be the signal for a washout bounce. Oh, look, here's an example right here. Roll out, wash down, wash out, big long wick, and 5, 6, 7 days of nice up movement. So let's hope we can get that again on that washout bounce. And then lastly, this is going to be the last one I do have for you. We did JCI. This one is Bank of Internet, and this one was found off of the Squeeze Me play. And on the Squeeze Me play, it's looking for high shorts, but stocks that are very close to a 52-week high. And Bank of Internet is very close to a 52-week high, and it has a pretty good short float of 39% on 59 million. I'm just going to basically eyeball this orange line here. And this is going to be a level that the short sellers don't want to lose, because this thing is going to 52-week highs if they can't corral this price and bring it back in. And with 39% short the float, jeez, Squeeze Me, I remind myself where I got it, why I like it, 39% short the float, close to 52-week high. That's all I need to know if it triggers. So we'll go ahead and set that as well. So that one is in. CNF washout bounce candidate. Let's take a look before I share. Oh, CINF, excuse me. Go ahead and take a look at this. Here's the reason it didn't show up on my scan. I can tell you right away. My scan wants a long candle, and as you can see, CINF has put in some long candles in the past. And what I need to see is a candle that's longer than the highest end of the average. So usually a lot of small candles with one big washout bounce would show up. Now, it didn't show up on my scan, but do I like it? Yeah, I like it because it found itself back. Let's take a look. Oh, and here's the fingerprint signature of the HFT. Basically taking the stock here, wiping it down all the way below 76, 75, 84, and then bouncing it all the way straight back up within a period of 15 minutes. That is the fingerprint of HFT algorithms. Humans do not trade like that. But the good news is when we see those usually mean the coast can be clear, that the volatility and all that has been washed out. What may have happened is everybody in here that bought the stock and was sitting and waiting saying, well, I don't want this stock to break below, and fill this gap. I don't want that. So I'm going to put, I'm going to put my stop loss right here. And then, just by negative feedback loops, just the way things work, in addition to my conspiracy theory of Ameritrade, Schwab, E-Trade, Scottrade, and everybody selling the order for flow, which we know they sell your orders, but do they sell your stop orders too? We don't know that. They don't admit that. So it's quite possible that people who have other jobs go out and set their orders at night and then go to work the next day and don't realize that they're being sold out with their hard stop orders to market internalizers like Citadel and Virtue and others. Not a real fan of that, as you could tell. Doesn't really sound like a good deal, but hey, the lobbyists and the SEC don't really seem to care if that is the case. So that's the theory behind what happens on these washout bounces, and that's the theory of why I believe going forward after a washout bounce, you could have a few days of nice, low volatility, simple movement. So to answer your question, Reese, I think that's a decent candidate. Watch it tomorrow. If it trades higher, maybe above this level, could be one to watch. But these are usually the counter moves before the move that you get that you want. Good question. Good example. Thank you for that. So we're running into the top of the hour. What I'm going to do is what I did last week with all of my working alerts. I'm going to go ahead and share them without hitting the wrong button and deleting them. So we highlight them, right click. We're going to share these selected price alerts and copy. Now it's on my clipboard. So calling attention to the chat window, I'm going to drop these price alerts in here, and for anybody who has the price alerts feature subscription, this code will be able to be brought in from your cloud, and there it goes, and it'll be basically merged with everything that you already have in your current watch list and your price alert list. So just a really cool way to share some ideas, and if those trigger, well, we're all going to see them at the same time. That was the cool part. All right, so what I'm going to do is let you guys have at that chat window for a minute or two while you do that, and then I'm going to pick up where Scott usually leaves off, which is letting you guys that haven't had a chance to come into Trade Ideas yet, here's an example or an opportunity to come in and try your first month at a 15% off premium or a 10% off of standard. Just using the Capture Alpha in all capitals as the promo code upon checkout. And again, if you're somebody who's never tried this and you're thinking about trying it, here's a great little discount to get you in for 1 month. And then if you heard what I said at the beginning of the webinar, you have access to a one-on-one session you can book with us, which is invaluable. I mean, we will really get you set up and going in the right direction. We'll share a lot of scans with you guys, and anything else that you want to know, we can help custom tailor that for you. So Capture Alpha is the current promo code. TI Standard, this is what you get basically with TI Premium. It's the back testing, it's the price alerts I was setting and sharing with you guys, and the AI, Artificial Intelligence Holly. That's the difference between the Standard and the Premium. You can reach us anytime at Trade Ideas. We do have a phone number, but please don't call this number because it's generally not answered. We take voicemails, and it's used for people who are having accounting problems, and we can usually get back to you in 24 hours if you're having an accounting issue. If you're looking for technical support, please info@trade-ideas.com. You can email myself, Steve at Trade Ideas, Andy's at Andy at Trade Ideas. We have a live chat window on our website at trade-ideas.com, which is down at the bottom right. If you need immediate assistance, there's usually somebody monitoring that as well. You can follow myself on Twitter at TodayTrader. A lot of the things that I talked about today, I kind of telegraphed over the weekend. So, the GDX levels and CLF and things like that, a lot of times I'm thinking out loud over the weekend. So you can get a little bit of a head start as to maybe what might be coming out for content the following week. So that's it for today's Trade of the Week. Appreciate all the comments. I'm reading them now. Thank you. Thank you, Mike C, as usual. I'm going to turn the recording